Hello home buyers. Today we're going to talk about the FHA down payment requirement that the FHA guidelines have established and have remained unchanged for many years. If you're purchasing a home and you want to use an FHA loan, the down payment requirement is going to be a minimum of 3.5%, and that assumes that your credit scores are at least 580 or higher. If your credit scores are below 580, 500 credit score up to 579, then the down payment requirement is going to be 10%. Now, even if your scores are lower, here's where the challenge comes in. Most lenders do not accept those lower credit scores. Even though the FHA guidelines permit them, lenders do have the ability to impose their own minimum credit score standards for FHA loans. So, with regards to the down payment, there are many ways that you could source the down payment, and here are the acceptable sources for those down payment funds. The first thing would be, obviously, if you have the money in your savings or checking account, you're going to provide the lender with the last couple of months' bank statements, and that is the typical way where the down payment would come from, and those are acceptable avenues to provide your down payment. If you're a cash hoarder and you just don't like to use banks and prefer to keep your cash at home someplace, well, that money can still be counted towards your down payment. However, you are going to have to either deposit it in a bank, so that way you can generate a statement from a bank account, so that way your lender can verify that the funds are there, or you're going to have to deposit that money in an escrow account, such as at the title company that's going to be doing the closing. That's one example. So those funds still have to be verified but prior to closing. So another avenue or option to source your down payment funds would be your 401k, your retirement IRA accounts. You could use up to 60% of those balances to count towards your down payment of the purchase of your home. You can use your stocks and bonds balances, but you'd have to actually cash them out. And the same with your 401k and IRA. You'd have to cash those out prior to closing and get them into an account, so that way you can use those funds for your down payment. If you are in the process of purchasing a new home, but you already have a home that you're living in now that you're selling, but it hasn't sold yet, you could use the anticipated proceeds from the sale of the current house to count towards the down payment of the new house. However, the sale of your current house must happen before you purchase the new house, and sometimes people coordinate that to happen on the same day. You sell your existing house in the morning, and in the afternoon you purchase your new house, and the title you use the same title company in between. So there's definitely a way to manage that way. You can use gift funds, and gift funds would be monies that would be given to you. It's not a loan, from a relative or a close friend, and you can use those gift funds not only for the down payment, but if they give you enough money, you can use it towards the closing costs as well. We have an article that talks about gift funds, and also another video which I'll link to up here. You can get a gift of equity, and a gift of equity is when you're buying the home from a relative. They can not charge you the full amount. So let's say they're going to sell the house to you for $200,000, and you need a down payment of, let's say, $7,000. They can gift you the $7,000 and actually sell you the house for $93,000, and the $7,000 will count towards your down payment. You can search for down payment assistance and grants. So there are plenty of those programs around the United States, in all the different states and many counties and communities. There are some lenders that do offer down payment assistance, but they're few and far between. And also, your credit scores have to be a lot higher for those programs. But you're going to need to search for down payment assistance programs on your own. There are a couple listed on the website at our down payment assistance program page that you could look through, but search the internet and you're going to have to apply for those and get approved. You may even have to take a first-time homebuyers class to be able to qualify for those down payment assistance dollars or grants. You could also have rent credit from the seller if you've been renting from the seller. So if you had entered into a rent-to-own agreement where some or all of the rent payments would be counted towards your down payment, then that credit can be used and the lender will accept that if you're getting an FHA loan towards your down payment. And another way is, if let's say this doesn't happen all that often, but if you're the realtor and you're purchasing the home and you're also going to earn real estate commissions on the purchase of your own home, then you could pledge the monies that you would earn in commissions on the purchase of this home as credit towards your down payment. And then finally, there are some employers who offer a down payment assistance program, or what's called an employer assistance plan, where they'll help you out with the down payment, and you'd have to just ask your employer whether they offer something like that. So those are the many ways that you could source the down payment. But in the end, the down payment for an FHA loan is 3.5%. You cannot negotiate that with the lender. They have no ability to change what the FHA down payment requirements are. So hopefully this helped you. If you have any questions about sourcing your down payment or want to get pre-approved, just visit FHAlenders.com and we'll help you to do that pretty quickly. Thanks for watching.